Want to be sure you are getting the most out of your retirement? For all the years of your retirement? That's the primary goal of More Living with Jim Brogan and our Dollars and Cents segment, where we provide you with an important financial tip that will help positively impact the quality of your life in retirement. And now, here's Jim with this week's Dollars and Cents tip.
How can you maximize the impact of your year-end charitable giving in light of the One Big Beautiful Bill? Very important topic. You know, when the Tax Cuts and Jobs Act was passed, effective the beginning of 2018, I believe it was, up until then, about 30% of all Americans itemized deductions. But with the almost doubling of the standard deduction, that changed to less than 10% are itemizing deductions. And that means, if you're not itemizing, that means that when you make a cash gift to a church or charity, if you're not itemizing, you're not really getting the benefit, the tax benefit of that gift. Now, you're certainly getting the benefit of impacting the charity or the church, but you're not getting the tax benefit. Now with the One Big Beautiful Bill Act, the standard deduction has gone to $31,500 for a married couple, half that for a single filer. So it went up a little bit higher. And for those that are 65 and up, in addition to the $1,600 deduction, that's the extra deduction you always have gotten, or for a long time if you're 65 or up, now you also get an extra $6,000 per person. Now that extra $6,000 deduction does phase out, but it's a pretty high phase out. I mean, it doesn't completely go away until you have single income of $175,000 or joint filers at $250,000. But that means that if you're underneath the income thresholds, a married couple 65 or older is going to have a standard deduction of almost $47,000. So we're going to likely see even fewer people itemize. So how can you be both impactful with your charitable giving, but also minimize taxes? Because the more you can minimize taxes, you can either give more for the same amount of money or give the same amount and have a little bit more in your pocket. Both of those are great outcomes. So there's a couple of things to know. One thing is, if you're 70 and a half or older, and this is pure age discrimination. I'm 56, I cannot do this. But if you're 70 and a half or older, you can give money directly to a church or charity from your IRA and not pay tax on that distribution. And once you're 73 and have required minimum distributions, that gift effectively comes straight off the taxable portion of your RMD. It is an above-the-line deduction. I guess I wouldn't call it, well, it is a deduction. It's above the line. It lowers your adjusted gross income. So if your required minimum distribution is $30,000 and you give $10,000 to a church or charity, now you took the 30 out. Now you're only going to be taxed on 20. Plus, you're going to get your standard deduction. Now, likewise, when you're giving, if you're giving pretty substantial amounts, then you can look at things like bunching your deductions, things like paying property taxes twice in 1 year. And then, we could I could wait and pay my 2025 property tax in January and then pay 2026 in November or December of next year. And then I've got two of them in there. And the state and local tax deduction went up to $40,000 now. It used to be $10,000. So if we have high deductions there, those start to add up if you bunch those. You can also bunch charitable giving if you are doing cash gifts. But another opportunity is to gift appreciated assets like stocks, funds, things like that. When you gift a stock or a fund, it's always a bigger tax impact than if you make a cash gift, because you're not having to pay the capital gains tax on the stock or the fund or whatever the appreciated asset is. Now, if you can be smart about bunching deductions and also get a tax deduction on that donated gift, donated stock, that's even better. But even if you don't get that itemized deduction, you're still being able to gift something. If I paid $2,000 for a stock and it's worth $10,000, I can give the $10,000 and I never have to pay capital gains tax on that extra $8,000 of earnings. Anytime I can make a gift that fully impacts the church or charity but saves me on my income taxes, that's always a powerful thing. So be sure that you incorporate smart charitable tax planning in your year-end giving strategy.
That's our Dollars and Cents segment for this week. You can find this week's Dollars and Cents segment and others by visiting BroganFinancial.com.